Hey everybody, JJ here, Bull to the Bust. It is Saturday, March 21st. Hope everyone's having a good day, good weekend. If you're stuck at home on lockdown like myself, I can still leave the house, but I've been staying at home. Actually, they have me working from home, so I'm okay. So hope everybody's well. This video, it kind of piggybacks off the video we did about 11 days ago about the housing market here in the U.S. Is the housing market about to get sick? Will it follow the stock market down? Well, it's anybody's guess, but the information I'm going to give you today, I think is going to help you kind of decide what may be happening very soon in the housing market. Now, in first hand, you would think with millions of job losses that are going to be happening that you would see a mega drop in home prices. But remember, we have intervention. We have, just like what happened over in Italy, governments are stopping foreclosures so people can stop making their mortgage payments and still not lose their home. That's going to still cause a supply shortage in the inventory of housing. Also, we have evictions that are being forbidden in some cities that could spread nationwide depending on how much more severe this sickness outbreak continues to get. And if landlords can't evict their tenants, then they're going to have to stop foreclosures as well. Otherwise, you would see millions of foreclosures, and then absolutely home prices would come down. But they're trying to keep this bubble propped up, and I don't agree with it. I'm just reporting the information here. But let's take a look at what is happening here in the markets and housing market. All right, first of all, right here, the 30-year fixed mortgage rate did see a jump up here just in the past few weeks. And a lot of people were pointing to this as the sign that the housing market's going to start coming down. Remember, the lowering of the Fed funds rate doesn't always immediately affect the mortgage rates. You could see it move in opposite directions. Over the long term, the trend does tend to match pretty closely. And if we go out to the 10-year chart of the mortgage rate, we do see that there's ups and downs, but we are still very, very low. Could it spike up again? Absolutely. Could the Fed lose control with their manipulation and their interest rate rigging? Absolutely. We do know that the Fed is heavily involved in the bond market and treasuries. They're buying mortgage-backed securities. And we're going to talk about the lending impacts of this here in a moment. But also the Fed, they're trying their best to keep rates down, including mortgage rates. We'll have to see how they fare in this. Okay, this just came out yesterday, March 20th. The median sales price of homes is not really dropping. It's staying pretty steady. Of course, we did see the peak up there in June of last year, and not much of a decline, pretty much just a seasonal decline so far. Of course, the massive job losses that we're about to see, that may impact the price going down the road. But let's look at some information that tells us that home prices may not drop, including the one we just talked about, the fact that they may halt all foreclosures, which is a good thing if you're somebody trying to keep a roof over your head and you can't make your mortgage payment. But that also means that people waiting to buy a home may not see lower prices because the inventory crunch is still going to be very severe. Right now there's a lot of buyers, people looking for homes, but just not many homes on the market. Maybe we'll start seeing an inventory surge because as people get more financially stressed, they'll start putting their houses on the market. But maybe people will just choose to hunker down and not sell their home with everything happening right now. Right, it's very hard to predict human behavior and psychology, but I can tell you they're trying to keep this bubble propped up. Let's take a look at a couple important articles here. Reuters article right here, U.S. home sales race to 13-year high, disruption looms. So far, not much effect here. U.S. home sales surged to a 13-year high in February, but the housing market recovery is likely to be derailed by the coronavirus pandemic. Now, it's interesting that they're calling this a housing market recovery. All right, we had a housing bubble about 12 years ago now that went burst, and that was the correction. Home prices came down from bubble levels to where they actually started to make sense for a while until the banks started ramping up the lending and loaning out money they don't have, even to a larger degree, causing home prices to go back up into bubble territory. So instead of calling this the new housing bubble, they're calling this a market recovery, which is kind of a deceptive term if you ask me. All right, it goes on to say here, the pandemic, which has unleashed a wave of layoffs, and left the economy teetering on the brink of a recession. Right now, what if people, because millions of people are going to lose their jobs, what if people are no longer able to buy homes, but corporations are able to buy homes? So even if home prices start coming down, we could have corporations like BlackRock and investment firms come in with their, very deep pockets and buy up, who knows, thousands, tens of thousands, maybe millions of homes if you look at all the real estate investment companies out there. All right, we know Warren Buffett, he took an interest in real estate investment when the housing market took a dump, 12 years ago. And he ended up a big winner in that, ended up with thousands of rental homes through his investment company. I can't remember the name of the company, but he took a big stake in a real estate investment company. And I'm not talking about the brokerage where Warren Buffett is now one of the biggest brokers in the United States. I'm talking about the actual buying of investment properties by taking a financial interest in a real estate investment firm. Right. Also, a lot of builders are going to start slowing down because there's a lot of questions out there on what's going to happen. No one knows how bad or how quickly this sickness outbreak could change. A lot of people think it's going to get a lot worse with millions of people infected. Look at Gavin Newsom said it could be 56% here in California. Other people say this is going to go away in just a few months and we have a wonder drug on the horizon. Look, I don't know. I'm not a doctor and I'm not a drug analyst or an immune system expert, but I can tell you that they're going to really try their hardest to keep home prices high. And let's talk about the bank lending reserve requirements that have been slashed to zero. Right, here is the Fed website. This is dealing with reserve requirements. As announced on March 15th, the board reduced reserve requirement ratios to 0%. That should be headline news in every newspaper, 0%. It used to be that the banks, they had to hold a fraction of cash in their institutions in order to lend money out. That means for every $10 they had, for example, they could loan out $100. That would be a 10% ratio that they have to keep in reserves. The banks no longer have to have any money to lend it out. So essentially, banks that are issuing loans are creating money out of nothing. They are the money machine. They are the money printers. It was previously believed and discussed that it was the Fed. We always hear the Fed's creating money, helicopter money. They have a printing press. Well, now it is the banks. And of course, they're going to put it out there that the banks have to get money from the Fed window. But now, no longer. This is a 0% ratio requirement. It is unbelievable. Most people, again, do not pay attention to this type of thing. What you and I are discussing here right now, I'd say less than 1% of the entire population is even aware of. And that people are scratching their heads. Why are home prices so high? Why are prices still rising when the average person is living paycheck to paycheck and is buried under tons of debt? This doesn't make any sense. What's going on? Is everybody rich? Well, no, the politicians are going to tell you everybody's rich, the best economy ever. Everybody's getting rich off the stock market. Hooray, hooray. Home prices are going up. That must mean everybody's rich. Well, look what happened to the stock market. That came down pretty hard. We saw a 30-40% haircut in some people's 401k. The housing market, it could be next. We'll have to see how the sickness outbreak affects things. But look at this. The banks, they can keep on giving out mortgages, and it doesn't matter how many people default. They can keep on getting other people into mortgages, bidding up home prices with money they don't have, banks lending out money they don't have. This is absolutely insane. And again, nobody is paying attention, right? People, they can really understand what's going on if they choose to look in the right area. A lot of people can tell you how many points their favorite sports star got in the last game. They can tell you all the movies that their favorite actor has been in. But you ask them how the banking system works, 99%, probably more, probably 99.9% of people have no idea how this Ponzi scheme works. Right? So the banks, they don't have to have any money, and they're getting help from the Fed. Let's take a look at this. The Fed is buying mortgage-backed securities. Not only are they buying, they've been buying, but now they're stepping up their action. And they added another $15 billion of mortgage purchases on top of the $32 billion already planned. All right, this is the equivalent of a non-stop bailout. A non-stop bailout. So people that live in a home, that have a mortgage, that can't make their mortgage payment, they're going to be calling up the bank, begging for forgiveness for a few months until they get a job back, if their job ever comes back. So us working class, we're going to be begging the banks to cut us some slack and not take our homes from us. Or if your home's paid off, maybe you'll be begging the government not to foreclose or not to put a lien on your home for unpaid taxes. But either way, most of us are going to be begging somebody to give us a break, while the banks, they get unlimited money they can issue. Right? All the people at the top of the banks, a lot of the CEOs, for example, are getting record levels of incentive. I'm sure a lot of them probably cashed out of their stock positions, or at least a majority of their positions, before the market took a drop. You can bet that they were out before the average 9-to-5 working class person. Not to stray off into too many different subjects here, because we started this video about housing, but take a look at this. Goldman Sachs CEO David Solomon gets a 20% raise to $275 million for his work in 2019. Right, so these people will be just fine, and they can run their institutions into the ground. They can lend out money they don't have. Therefore, they have to run to the government, to the Fed, to get a bailout. They'll be just fine. It is the working class that's going to feel the most pain on this. And you can bet these billionaires are going to start looking at housing if home prices do start to come down. Again, I'm not predicting what's going to happen. I don't have a crystal ball, especially with this sickness outbreak. We also have to try to predict the moves of the bankers and the funny money, unlimited lending machine that's out there. Are they going to continue to give out mortgages even though millions of people are losing their jobs? Will institutions still be allowed to come in and buy homes? And pretty soon, most of the United States will be renters. And when it's all done, maybe hardly anyone will actually own their home. And even if you do, it's still, you have to pay taxes. So pretty much the government's your landlord. That's the way many people look at it. All right, so again, home sales still high, and we'll have to see how the numbers look next month. This just came out, just a recent report here. Remember, the lockdowns and things like that are not going to show up for a couple months in the housing market numbers. And who knows, maybe the banks will just continue to lend out money to people that don't have jobs because, why not? They don't have any reserve requirements. So it's pretty sick. It's pretty insane. We'll have to see how it goes. In a world where banks had to have money in the bank in order to lend it, then home prices would be a lot lower. They would be about half price, maybe even about 25% of where they're at right now, because less people being able to borrow money, because the banks have to have the money in reserves, is less that they'll have to bid up home prices. All right, everybody, thanks for watching this update. Let me know what you think. Are you seeing more for sale signs in your neighborhood? Are you hearing or seeing home prices drop? Well, I'm not here in San Diego. In fact, we're still seeing people looking at houses. I drive by some open houses every now and then just to check on it, and people are still out. Now, of course, this whole lockdown where Newsom said everybody stay at home just starting 2 days ago on Thursday, we'll see how that affects people. Some people may say that going to shop for a home is essential because you need a place to live. It's not going to be police enforced. People can still go out, and I think people are still going to be looking at houses. Banks are probably still going to be lending, even though now's the time when banks should really be pulling back and not lending. Well, guess what's going to happen when home prices do come down, if and when. They will eventually, but when they come down. But guess what? When home prices finally do come down, and they will eventually, that's when banks are going to pull back on the lending. That way the corporations and institutions can come in and buy the homes for the best prices and rent them out to you. That's about all for now, everybody. Hope you're well. Hope you're safe. Take care. Bye for now.